The world of cryptocurrency is buzzing with excitement once again. Bitcoin, the digital king, has been climbing, and everyone from seasoned investors to curious newcomers is watching its every move. As of today, June 18, 2025, the price is holding strong, fueling dreams of incredible wealth. This feeling of optimism is palpable. You can see it in social media posts, news headlines, and market charts. It seems like every day brings a new prediction, each one more sensational than the last. People are buying in, hoping to catch the next massive wave up to life-changing profits, and it's easy to get swept up in the hype when prices are going in the right direction. Amidst this chorus of bullish sentiment, one crypto analyst, who goes by the name Mr. Parabolic on the platform X, has offered a particularly startling forecast. His prediction is a double-edged sword that has caught the attention of the entire crypto community. On one hand, he suggests that Bitcoin is on the verge of a monumental surge, potentially soaring to an unbelievable peak, well above $200,000. This is the kind of number that makes headlines and gets people to invest their life savings. But here's the catch. He believes this incredible high will be immediately followed by an equally dramatic and devastating crash, potentially sending the price plummeting back down towards the $30,000 mark. This isn't just a wild guess. The analyst's prediction is rooted in a popular technical analysis method known as the Elliott wave theory. To put it simply, this theory suggests that financial markets driven by human psychology move in predictable, repetitive patterns or waves. Think of it like the tide coming in and going out. There are typically 5 waves that move in the direction of the main trend. These are the upward impulse waves, followed by 3 waves that move against the trend, the downward corrective waves. It's a framework that tries to bring a sense of order to the seemingly chaotic swings of the market by identifying where we are in a larger cycle. According to Mr. Parabolic, Bitcoin is currently riding the 5th and final impulse wave of a massive cycle. This is the last leg of the upward journey, the final push that often generates the most excitement and brings in a flood of new, inexperienced investors. It's the grand finale before the inevitable correction begins. If his analysis is correct, it means the current bull market is in its final, most volatile stage. The potential for massive gains is real, but it is shadowed by the looming risk of an equally massive downturn that could wipe out a significant portion of those gains just as quickly as they appeared, catching many off guard. Let's break down the numbers in this bold prediction because they are truly staggering. The analyst projects a potential cycle top for Bitcoin somewhere above $200,000. He anticipates this peak will be reached within the next 5 to 8 months, placing the climax of this bull run somewhere between late 2025 and early 2026. This would represent an incredible rally from current levels, creating a frenzy of buying activity as the price smashes through one all-time high after another. The excitement would be immense, with mainstream media likely covering the event non-stop, further fueling the public's interest and desire to participate in what looks like a can't-lose opportunity to make a fortune. However, the Elliott wave theory dictates that what goes up must come down, and after the 5th wave peaks, a severe corrective phase is expected to begin. This is where the prediction takes a dark turn. The analyst warns of a brutal bear market that could erase the majority of the gains from the preceding rally. He forecasts a potential crash that could drive Bitcoin's price all the way down to around $34,932, or possibly even lower into the $30,000 range. A drop of this magnitude would represent a 70 to 90% retracement from the projected peak, a scenario that has historical precedent in Bitcoin's volatile past after the major bull runs of 2013, 2017, and 2021. This isn't just a theoretical drop. The analyst identifies specific price levels that could act as triggers for this cascading failure. A key level to watch would be around $88,115. In his view, if Bitcoin were to break below this price point after hitting its peak, it could set off a chain reaction of automated selling and liquidations. These are forced sales that happen when leveraged traders can no longer cover their positions, adding immense selling pressure to the market. This forced selling can quickly spiral out of control, pushing the price down faster and further than many would think possible, creating a panic selling environment where everyone rushes for the exits at once. For the average person holding Bitcoin, the implications are profound. Imagine watching your investment portfolio triple or quadruple in value. only to see 80% of it evaporate over the following year. It's a gut-wrenching scenario that can lead to devastating financial losses, especially for those who buy in near the top, lured by the promise of easy money. This prediction serves as a stark reminder that the crypto market is notoriously volatile. The same forces that can generate incredible wealth on the way up can also destroy it on the way down, and timing the peak is something that even the most experienced traders struggle to do with any consistency. A common belief in this current cycle is that this time is different. The main reason for this optimism is the arrival of large institutional investors. With the launch of Bitcoin ETFs, major financial players like BlackRock and Fidelity are now involved, bringing billions of dollars and a sense of legitimacy to the market. Many believe that this institutional presence will act as a stabilizing force, preventing the kind of catastrophic crashes we've seen in the past. The theory is that these big players are in it for the long haul, and will simply buy up any major dips, creating a solid price floor and making the market safer for everyone involved. However, Mr. Parabolic strongly disagrees with this narrative. He argues that institutional adoption doesn't make Bitcoin immune to deep, painful corrections. In fact, he suggests it may be masking even steeper risks, creating what he calls the greatest euphoria trap ever. The presence of these institutions could be lulling retail investors into a false sense of security, making them believe that the wild, volatile days of crypto are over. This complacency could lead them to take on more risk than they otherwise would, assuming that the big players will always be there to bail the market out. It's a dangerous assumption to make in any financial market. The reality is that institutional investors are driven by profit motives just like everyone else. While they may have longer-term strategies, they are not immune to market sentiment and are certainly not charities. If a major downturn begins, they will act in their own best interest and the interest of their clients, which could involve selling off massive amounts of Bitcoin to protect their capital. Their large-scale selling could actually accelerate a crash rather than prevent it, creating even more panic and volatility. The idea that they will simply absorb all the selling pressure from panicking retail investors might be wishful thinking. This potential euphoria trap is a critical concept for every Bitcoin holder to understand. It's the psychological danger of believing that the risks have disappeared just because the players have changed. When everyone believes a crash is impossible, they stop preparing for one. They might over-leverage their positions or fail to take profits along the way up. Then, when the market inevitably turns, they are caught completely off guard. The analyst's warning is that the very factor everyone is counting on for safety, institutional involvement, could be the ingredient that makes the next downturn so psychologically damaging and financially ruinous for the unprepared. While the forecast for Bitcoin looks stormy after its potential peak, the analyst's prediction contains a silver lining for a different part of the crypto market: altcoins. Altcoins, which are essentially all cryptocurrencies other than Bitcoin, often follow a specific pattern. Typically, after Bitcoin reaches a major peak and starts to consolidate or decline, capital begins to flow out of Bitcoin and into these smaller, riskier assets. This rotation of money can ignite what is known as an altcoin season, a period where many altcoins experience explosive, parabolic rallies, often far outperforming Bitcoin in percentage terms. According to the analyst, a massive window of opportunity for altcoins could open up in the 6 to 12 months following Bitcoin's projected top. This means that while Bitcoin might be entering a prolonged bear market, the crypto space as a whole could still offer incredible opportunities for profit. Investors who successfully time this shift, selling their Bitcoin near the high and moving into promising altcoin projects, could potentially see another round of spectacular gains. However, this strategy is extremely high risk, as altcoins are even more volatile than Bitcoin, and many can crash to zero during a bear market. So, what's the takeaway from all of this? The primary message is one of caution and preparedness. While the idea of Bitcoin hitting $200,000 is incredibly exciting, it's crucial to have a plan for what comes next. This means not investing more than you are willing to lose, as the risk of a severe downturn is very real. It also means considering a strategy for taking profits. Instead of holding on with diamond hands all the way to the top and back down again, it might be prudent to sell portions of your holdings at predetermined price targets on the way up to lock in some gains. In summary, the road ahead for Bitcoin is likely to be a wild one. We could be on the cusp of a historic rally to over $200,000, driven by the final wave of market euphoria. But this peak may be a trap, leading into a devastating crash that could send prices back to $30,000, even with institutional players in the market. For the average investor, this is not a time for complacency. It is a time for careful planning, risk management, and a healthy dose of skepticism. Enjoy the ride up, but always be prepared for the roller coaster to take a sharp turn downwards.